I'm Shannon Doyle, and I'm the owner and principal broker here at Eugene Realty Group. And I just wanted to do a quick little video just explaining what different types of loans are available to you as a home buyer. We get a lot of folks that perhaps are buying their first home or haven't bought a house in a while. And there are a few different types of loans, and they have some ins and outs that are good to know, just so you can kind of have a realistic expectation and, ask your lender when that point comes, if you haven't already started with one, just to make sure that you get into the right, I like to call it vehicle, but the right, loan type for you. So some of them, there's different down payment types, credit score minimums, and just nuances of, the property having to qualify and meet certain criteria. Mortgage insurance is something that comes into play, so I'll explain all that. So there are a couple of different loan types that actually are 0% down, and this is just absolutely fantastic. It's just a wonderful opportunity for some folks when you meet the criteria. So the first one is a VA loan, and you have to be a veteran, so you have to have served in the military in order to qualify for this. So if you don't, I'm sorry, there is another option, and if you do, this is a fantastic loan program, and I highly, highly recommend it. One of the reasons is not only does it require 0% down, which you can put a down payment down. I mean, you can do 15, 20, 30, 40% down. You can do whatever you like with it, but you don't have to have a down payment, so that's really great. The interest rates are actually sometimes lower than other types of loans, which is really great too, and there is no mortgage insurance. So I'm going to stop for a sec and talk about mortgage insurance. On most loans, whenever you put less than 20% down, there's a mortgage insurance fee that becomes a monthly fee, and that can be some hundreds of dollars, not usually a ton, but it's a smaller amount, but still it adds up over time. So anytime you put less than 20% down, that is probably going to apply. With a VA loan, there is never mortgage insurance. So that is really great. There's an upfront fee, I think it's a little over 2% that gets collected, but it gets rolled into your loan typically. Upfront costs can all be negotiated. Sometimes you can pay them upfront. You can buy your rate down and discount your rate. There's all kinds of stuff that you can do, and those are things that you can talk to your lender about and really figure out a strategy that works best for you. But the VA loan is just fantastic. The one thing to know about the VA loan is that the property actually has to be in pretty good shape. So there can't be peeling paint, there can't be dry rot, there can't be any broken window panes, big gaping holes in the roof, just all kinds of stuff like that. I'm exaggerating a little bit, but really it has to be in pretty good shape. So that's something to really be aware of. When the appraiser comes out to appraise the property, they're actually going to kind of inspect it a little bit, and they're going to take some pictures, and it's got to meet certain criteria in order to qualify. So that's the VA loan. The other 0% down loan is called a USDA loan, and there are some caveats to this. There is an income cap, so you can only make up to a certain amount of money, and it's available only in more rural areas. So we've got some areas in Cottage Grove and down into Cresswell and up, over into Veneta and some certain areas of the county. They have a really great website. We can plug in the address, and then we're able to see if it qualifies for a USDA loan. But this is another great program, 0% down, and if you were to ask the seller to pay your closing costs, which might be an option, you could literally get into a house for not very much money at all. So for some of us, that's a really great option. Again, this is a government subsidized loan, so therefore the property has to be in pretty good shape. It's kind of similar criteria to the VA. And then the next option, as far as lower down payment loans, is an FHA loan. So an FHA loan requires a 3.5% down payment. There is mortgage insurance on that, and there is also on the USDA loan. I forgot to mention that. Again, the property's got to meet, it's got to be in pretty good shape, so it's got to meet certain criteria. The advantages of an FHA loan are that the minimum credit score is lower than most other loans, and it's a 580 credit score. There is also some options to have your down payment given to you as a gift, and some other great things, you know, the debt to income ratio and some different things like that. It's a little easier to qualify for this loan sometimes for some folks that aren't quite going to qualify for a conventional loan or maybe something else. So FHA is a pretty good option. Then we move into conventional. And conventional financing is what most people think of when they think of a home loan. Think, you know, you've got to have 20% down. That's a conventional loan. Conventional loans with some lenders start with as little as 3% down. 5% is pretty common, and then they go all the way up to as much as you want to put down. I mean, you could put 75% down if you wanted to, so you just go up, and it depends on, you know, what makes sense for you and your circumstances. Conventional loans, if you put less than 20% down, will have mortgage insurance. And the great thing about them is the property qualifications are less strict typically. So it's going to be a, you know, case by case basis with each lender, but for the most part, the property won't have to be in such great shape as it does with the other government loans, and this is not a government loan. So that's why a lot of people tend to go with conventional loans. So it really depends, you know, I think at the end of the day, really sitting down and having an in-depth discussion with a mortgage person or a lender is really the best place to start, and they can answer all of your questions, let you know where interest rates are at, you know, what your closing costs are going to be, and it really gets you into the right loan for your circumstances. And you know, sometimes we have folks that don't think they're able to qualify, and they're surprised. You know, one of the loans works perfectly, and there are some options and some things you can do. So I highly recommend, you know, reaching out and connecting with a mortgage person or a lender, and just, you know, exploring the option and see if you can get pre-approved. If you would like a recommendation, we work with a couple of really, really great lenders, and we can definitely get you pointed and set up, you know, pointed in that direction and set up with someone really great. And if anyone on our team can help, we have an outstanding team of agents here at Eugene Realty Group, and they're actually pretty knowledgeable about loans, and we can get you going in the right direction. So if there's anything we can do to help, feel free to call us, text us, email us, and we'll be happy to help in any way that we can. I hope this was helpful. I just wanted to do a quick overview. There's obviously, I could go on for about 2 hours with all the ins and outs of everything, but I hope just as a quick snapshot that was helpful. Thanks so much.